I think those are the things that scare me and most adult creators is like accidentally being out of compliance, like accidentally doing your taxes wrong, accidentally. It's like, it's not that anyone's intending to like pull one over. It's the misstep of not even having a remote understanding of these things.
Welcome back to On the Horizon. This is Melrose Michaels. I am your host, and I'm here to share what's worked for me in building my adult creator business to try to make building yours just a little bit easier. Let's get into today's episode.
The last time we brought this guest on was one of our most popular and appreciated spaces, and I'm so excited to have her here back with us ahead of the new year. Katherine Studley from The Only Consultant. Raised in Buffalo, New York, she is a tax accountant by trade, but a creative in essence. In 2021, she founded The Only Consultant, a judgment-free consulting firm dedicated to providing tax and financial advice to content creators, exotic dancers, and other creative freelancers looking for a non-traditional tax experience. She had the idea while scrambling eggs with $400 in her bank account. Despite having no prior experience in entrepreneurship or the spicy industry, it became clear that there was an overwhelming need for straightforward, compassionate, judgment-free financial help. Her client list quickly grew to the hundreds of small businesses. In 2022, she founded Prisma Tax Group to help her clients achieve financial success and peace of mind. The multicolored light beams of the prism are each unique, just like the pathway to success in small business. By focusing on innovation, collaboration, and empowerment, this is not your typical accounting firm. Katherine, thank you so much for joining us again. You have no idea what an honor it is to have you on here for the second time.
Of course. Thank you so much for having me. I'm happy to be here.
This is such a timely part of the year to bring you on. And I think that's what really inspired it when we were planning, the rest of our spaces and the rest of our podcast episodes was that going into the end of the year, it's so important to plan and prioritize yourself for the year ahead. I find myself, obviously in the midst of that now, even a little late, probably should have started at the beginning of Q4, but I think that having these conversations and exposing creators to these topics now is super timely. And I really wanted to bring you on to talk about end of year financial planning and also planning for the year ahead. So I guess my first question is, because we are at the end of the year, wrapping up 2024, what is it that adult creators should be focusing on in these final weeks of 2024, just to close out the year in a financially strong way?
Yeah, now is the perfect time to be proactive because we're still in the 2024 tax year. So there's still an opportunity over these next few weeks to make some strategic decisions as it relates to your business. So what you want to be doing right now is tracking your income and your expenses. It's called a profit and loss statement. You can do this any way that works for you. So I have a lot of clients that are in QuickBooks, other clients that are using an app, people that are in spreadsheets. You're an entrepreneur. You can do your bookkeeping however you want, but you want to be knowing how much you're spending on different categories and what your profit is. Because at the end of the day, you're taxed on your profit. So it's very important. That's the number that you want to be focusing on. And then something else to be considering is that if you paid any other independent contractors throughout this year, if you have an assistant, if you have a manager, if you're paying photographers, if you're paying out different collabs, if you've paid out any individual over $600, you need to be issuing these people 1099s. So now's a good time to be adding up how much you've paid everyone in anticipation for the 1099, which is due January 31st of 2025. And then obviously the profit and loss statement, your income and expenses, that's what we'll need to file your taxes. But if you can, get it all caught up as of December 1st, that your future self will thank you. Will be in a good position.
Yeah, so you mentioned some of the things I get commonly asked about, and I am no position to give any kind of financial advice. So I always point people towards you because I am still cleaning up my mess from not realizing, that you have to save for taxes in my first year in adult. But when it comes to what you were describing about paying freelancers and anyone you paid and tracking that part, can you explain how it works for those creators working with agencies? Because this is something I get asked a lot about is like, what do I have to disclose tax-wise or business-wise about the agency that runs my pages, for example? Because, they're obviously taking a portion of their earnings, and a lot of creators are super unclear on how that works. I'm unclear on how that works.
Sure. Yeah. So it depends on how their business is structured. So if they're an S corporation, you actually do not have to issue them a 1099. But if they are a single member LLC or partnership LLC, you do have to issue them a 1099. So the 1099 is a form that gets reported to the IRS, and it's the form that they will use to file their taxes. It becomes an income statement, a wage statement to them, and expense to you. But in order for you to issue a 1099 form, you need to collect information first. And you can collect information using what's called a W-9 form. It's just basic name, address, phone number, social security number. So that is all the information that you'll need before you can issue the 1099. And then something to consider, we're going to do a deep dive into this later, LLCs. But if you are a sole proprietor, a freelancer, and you are issuing 1099s to other people, your social security number is on the 1099 that you'll be issuing. So that's something to keep in mind as far as discretion goes. LLCs don't have a lot of tax savings, but it does help with discretion in this case.
Okay, that makes a ton of sense. So when it comes to kind of the year-end deductions, because like you're describing, we should be tracking our expenses, our income, all of the rest. When it comes to the deductions, what like last-minute purchases or investments can help reduce taxable income before December 31st? Because I know so many creators they're very unclear on what is a tax write-off, and this is another thing that I guess we really do get asked a lot about. And I've even heard from past accountants of mine and my current, accountant now, different responses to what is deductible and what's not. So I think that this question specifically will bring a lot of value to a lot of people listening in. Just like what is able to be counted as a deduction, and then what reduces taxable income before the end of the year.
So, business expense is the same thing as a business deduction. It's any expense that is ordinary and necessary to you earning self-employment income. That's the definition from the IRS. So basically, if you must spend money in order to make money, then it's a valid business expense. But the catch is that it cannot be personal in nature. And that's why there's a lot of gray area in this space, because in a lot of cases, you're monetizing your personal appearance. So, we can do a deep dive into this later on, but it technically has to come off at the end of your shift. So strip eyelashes would be a write-off, but not sew-in lashes. Whatever you're paying your accountant to prepare your tax returns is a write-off. That's a valid business expense. You need that to make money. If you're paying for takedown services, whatever you're paying your manager, these are expenses you must incur in order to make money. If you're self-employed, your grocery bill is not a write-off. You don't need groceries as someone who's self-employed. It's a basic personal expense. As far as like end of year deductions, first you want to make sure that you have your income and your expenses tracked. You don't just want to buy things just for the sake of buying things. It's important that you're showing a profit on the books so that you can leverage your tax returns as purchasing power later. If you want to get a loan, if you want to get real estate, it matters that you're showing money on the books, which means that you have to pay tax. So first thing, track everything. But some options would be you could pay out like annual subscriptions ahead of time at the end of the year. So if it's something that you're paying monthly or like whatever, Apple storage, potentially it's something you could just pay out at the end of the year. You could buy certain equipment, cameras, computers, ring lights, things you're going to need for your business. If you have an invoice from your agency or management, you could pay that early at the end of the year. You could also be contributing to a SEP IRA, a retirement account. Kind of more of a conversation for a financial planner, but as someone who's self-employed, you should know that that exists and that's an option to you.
Okay, that's super helpful. I have a lot of creators that ask me about investments in IRAs and things like that, and I remember that language and having those investments when I was employed in the mainstream world, but as it kind of like I've left that civilian job and come over into this work and being an entrepreneur, those things all shifted for me. So it's very hard to know what is still even an option for us. So you mentioning like knowing that's an option to you, I think that's really important. I want to get into that a little bit. When we're talking about some financial planning, just because this is like a nice segue, what things would you consider an adult creator maybe be take an interest in or pursue for investing? Do you think creators should have IRAs or maybe, HSA savings accounts and things like that?
This is not really my area of expertise. So tax and finance is something different. But I will say I have a lot of clients who are on SEP IRAs. It's called a Simplified Employee Pension Individual Retirement Account, SEP IRA. It's basically like a piggy bank for self-employed people to save for the future. So you can work with your accountant and your financial planner to calculate how much money you can be contributing to the savings plan every year. You're saving for the future and you don't have to pay taxes on that money in the year that you are contributing. But you'll pay the tax when you take it out. So it's a 2-for-1. You're saving for your future and you're saving tax. So that's something that we can definitely coordinate with financial planners on if anyone's coming to us for tax preparation.
Nice. Okay. So some other things that we get asked a lot about are charitable contributions and how kind of creators can leverage charitable donations for tax benefits. And then also what of those charitable donations qualifies as deductible. So for example, like I donate to the Free Speech Coalition every month. And I carry kind of a subscription to that or to them, to donating to them. Is that something that's considered a charitable contribution?
So charitable contributions there's no longer a tax benefit for this if you are taking the standard deduction. So I'm going to have some tax speak here. So the standard deduction is free money that the IRS gives you for existing. For single filers for 2024, it's about almost $14,000. I think it's $13,850. So you can either take the standard deduction or you can itemize your deductions. And these are like very specific deductions: mortgage, interest, state and local tax, and charitable donations. So if you're in the tax position to have all of these itemized deductions and they are higher than 13,000, or it's like 27 and change if you're married, 20 and change if you're head of household, depends on your filing status, then you can take these charitable donations and there will be a tax benefit. But the tax law changed in 2017. So now a lot of people are not itemizing anymore. So long story short, charitable contributions are probably not going to benefit you. They used to have like a $300 cap on it, but they ended that as well. So as of right now, unless you're itemizing on Schedule A, no benefit.
Okay. Interesting. All right.
If you're enjoying this podcast episode so far, please take one moment to share it with another one of your adult content creator friends, because you know what the rule is here. We do not gatekeep, and we want to make as many adult creators' businesses as easy as possible. And you sharing this episode with them might do exactly that. Thanks so much in advance.
The other thing that I want to kind of get into is planning for the year ahead. So we're almost at the new year. You're nearing holiday season, going into 2025. I was curious if there's any anticipated tax changes coming under this new administration specifically, because we obviously, our community, our industry has a lot of concerns with this administration and we don't know what to expect. I think something that's really common right now is this, sentiment of uncertainty. So I guess as it relates to taxes specifically, do you think that there's anything we can expect, anything we should be looking out for, or even just aware of?
So as of now, nothing is concrete. Trump has talked a lot about replacing personal income tax altogether with tariffs from different countries, basically putting a tax on all imported goods. We'll see what that looks like in practice. As far as right now, nothing's going on. He's also talked about no tax on tips, no tax on overtime. But I think for the moment, we'll just kind of have to wait and see how this unfolds. Something that I do want to discuss that I think is very relevant to the industry is this 1099-K form, which the IRS keeps teasing us with and saying they're going to change the rules on every year. This is a third-party payment reporting statement. It's a kind of 1099. So when you're on platforms, you're earning a 1099 NEC. That stands for non-employment conversation. You also have the 1099-K. This is for Venmo, PayPal, Cash App. And they're talking about changing the threshold again to be $5,000. So if you earned $5,000 on any of these platforms, then you would be issued a 1099. But the past 3 years, they've said they're going to do this. And every year at the last minute, they change their mind. So as far as what is the new administration going to do, I'm not sure. He'll probably keep a lot of the same tax changes that he put in place in 2017. That's to be seen. But I would say for the 1099K forms, just be sure that you're tracking all of your income and your tips that you're making on these third-party payment forms, because the IRS is definitely going to be looking for their cut of it.
Oh, that's great advice. Yeah, I always hear about the 1099K changing. I always get the notification warnings through Venmo, through PayPal of making sure that you report and asking you to report. I think, wasn't it before like something over $500? Is that where it's at now?
It was $600, and right now I think it was 200 transactions and $20,000.
Oh, wow.
So a lot of
Okay.
people are seeing it like e-commerce. If you're selling things on Shopify and PayPal, you're getting these, but not so much for Venmo transfers because it's hard to tell what's personal and what's business. But a lot of people are operating their business on these platforms, but the IRS just can't figure out how to track it and get their cut, basically.
Yeah, yeah. There is something that I definitely want to bring up and talk about, and that is this, I guess, habit and the right way of doing taxes, which is these quarterly payments. Creators should be preparing for 2025 quarterly tax payments. How do they do that, especially if their income fluctuates? And, as an adult creator, your income's usually coming from like 20 different platforms, different places. And it's very hard to know what it's going to look like, or if it'll be even remotely similar to the year before, or the month before even.
Yeah, exactly. So one thing I want to mention that we haven't yet is that as soon as you're self-employed, you should have a separate bank account for your business income and expenses. It can be a separate personal checking account, does not have to be a true business bank account hooked up to an LLC, but all of your spicy income should be going into one bank account. It's from every platform. If you're getting Venmo tips, Cash App, all goes into one spot. And from there, you can be setting aside percentages of your deposits for taxes. I usually recommend 25 to 30%. Depends on a lot of things. This is blanket advice. You should definitely talk to a tax preparer. But if you're putting aside at least 25% of your deposits, it's going to put you in a good position when it comes to tax time for paying out your taxes. But as someone who is self-employed, you should be making your estimated tax payments throughout the year as well. Otherwise, you will have interest and penalties when we go to file. It depends on how much you owe. It's a percentage of what you would owe is how much the fee is, but you can get ahead of it by making estimated tax payments. So for example, let's say you filed your taxes last year, 2024, and you owed $10,000. That means that you want to be paying in every quarter 25% of that, which would be $2,500 per quarter. And then you'd be prepaying your tax bill, essentially. So when you go to file your taxes, you'd say, I have a $10,000 credit, and then you just pay the difference or potentially even get a refund. And then there's even one more step here. So if you are making over $150,000, you should be paying in 110% of last year's tax and then dividing that by 4. But a lot of times if you're going to a tax preparer, they will include estimated tax payment vouchers in the tax return. If you look through all the pages of your tax return, it's called 1040-ES for estimated tax payments. And you can just pay those in per quarter. It's not filing a separate tax return. It's literally just going to the IRS website and making those payments. And also potentially your state, if you have state tax too.
Okay. I love that you discussed the 110% if you earned over, what was it, 150K? That's not advice I've even heard before, to be honest. If you're earning above that threshold, to save the 110% and then divide it amongst each quarter. That's news to me. So I'm so sure people listening on this call are going to be like, oh, I didn't know that either. Something that you mentioned about having the separate bank account and having all of your, spicy income going in one account. A lot of creators struggle with keeping and maintaining bank accounts. So I was curious if that same logic could be applied to maybe a prepaid card that they use, for example, or how there's these services with these like online banks that have just these pre-fillable cards that you can then pay your bills off of, et cetera. Can that work the same way?
It could work the same way, but I would be careful. Like I definitely would not keep all of your money in Cash App. I would not keep your money in Cash App. I would not be using a Cash App card. That's not really safe. But then obviously I understand there's so much banking discrimination in this industry as well. So there's some things that you can be doing to help yourself as someone who's working in this industry. So you obviously a Phoenix deposit is a Phoenix deposit. If they're using AI, they're going to see Phoenix deposits. But maybe just cash out once or twice a month. So the cash outs are not as frequent. All these micro deposits, that's something that flags banks. But you absolutely can use an online bank. I have a lot of clients who are using Ally, Bluevine, but really it is just it's kind of just the luck of the draw. I have a lot of clients who've been using Wells Fargo for years and have had no issues. And then some clients that sign up for Wells Fargo and instantly get locked out. So it just kind of depends. Yeah, unfortunately.
Yeah, yeah, that's kind of been what I've heard throughout the community as well. We mentioned earlier that we were going to get into deductions. So I was wondering if we could go over some of like the must know write offs specific to adult creators.
Sure. So the first thing I'm going to mention and always do is your health insurance is a write-off. If you're self-employed and you cannot get your health insurance through a W-2 job, then your monthly insurance premium is 100% a write-off to you, not your co-pays, but the health insurance. Also, whatever you're paying your manager, assistant, photographer, like we talked about. So if you're issuing the 1099s, you can write off whatever you're paying these individuals as well. Also, legal and professional fees. So if you have an accountant, if you're working with an attorney, if you formed an LLC, all of those fees are a write off. Also, a percentage of your rent, not your mortgage, but your rent as your home office. And it's based on square footage. So let's say your apartment's 1,000 square feet. Use 100 square feet for content creation and to organize your income and expenses. So then 10% of your rent and utilities are a write off. Same thing with your phone bill. So if you have one phone for work and 40% of the time that you're using your phone is for content creation and to talk to fans, and your phone bill, 40% of that would be a write off. If you have a separate phone altogether, then the whole separate line is a write off. And then same thing with Wi-Fi, a percentage. The clothing that you're wearing in content creation, conferences, seminars, and this kind of varies by niche as well. So like, for example, if you are a creator who's working in feedism, if you're eating on camera and that is the niche that you're working in, the food that you're consuming on camera is actually considered a supply and not a meal, meaning that you can write it off 100% instead of 50%. So a lot of these things do vary based on the niche. So what do you absolutely need for content creation? So it's computers, iPads, ring lights, anything that you're using for production. If you're traveling for collabs, if you're renting an Airbnb for a collab, your meals would also be a write-off if you were traveling. It really just depends on how you're running your business. And then I do want to talk about things that are not a write-off too, if I could.
Yeah,
If I could.
please.
Yeah. And I'm sorry to be the bearer of this news, but cosmetic surgery is not a write-off because it's permanent. It's part of your body. You can't take it off. So that's, any physical modifications. Also massages, facials, tanning, the gym, anything like that. Even if you were a bodybuilder, the gym would still not be a write-off to you, or your supplements still wouldn't be a write-off to you. And there's some things that are kind of on the line too. So like press-on nails, but not acrylic nails. We talked about the strip lashes, not the sew-ins. So you have to think about what comes off at the end of your shift. What do I actually need to create this content?
That's so interesting because I was going to ask about the spray tanning specifically. And the gym comes as a surprise, especially if you're a fitness, creator of any kind or just a bodybuilder, like you mentioned. That catches me by surprise as well.
Yeah, I think you could squeak out a spray tan if you said, I wouldn't run up every single spray tan you get, but if you got a spray tan in preparation for a photo shoot and you monetize that photo shoot, I think that's kind of one that's on the line. It can kind of go both ways. Every time you're tanning would not be right up.
Okay, that makes sense. That makes perfect sense. I'd like to go in a little bit into, actually, before I go into the next topic, I had a question about tax attorneys. So this is something a friend of mine is going through right now, where they got behind in back taxes and they're working to kind of get caught up. Because as you mentioned earlier, if you fall behind, you're not saving for your quarterly taxes. At the end of the year, when that stuff comes due, there's also fees, there's also penalties. And then you're kind of having to pay full lump sum and then some to break even. And this is a place I'm familiar with. I've been there. There are constant advertisements, and if you ever listen to the radio, I'm sure some of you guys have heard them as well, but tax attorneys that are supposed to go to bat for you to kind of I guess, argue or nullify or compromise your back taxes that you owe. And I have been told from people, along the way, giving financial advice that can be a great idea or that can be a horrible idea. Something to the effect of like, they'll argue your debt down, but then you have to count it as income for a future year because they negotiated something you owed. Is there any truth to that, or can tax attorneys be helpful in your experience? I guess I was just curious because of the circumstance that I was being told about recently.
Yes. I mean, I think like any industry, they can be helpful or exploitative. Same thing with accountants, right? Like an accountant can really help you or really hurt you. They can help you with audit representation. They can help you negotiate the payment plans down. They can help you with tax liens and levies and back taxes, defend you if you have like tax evasion or fraud. I would say if there's any like litigation, if you have to go to tax court, then I would get a tax attorney. But I would be careful about just hiring anyone that has uh, any if you're seeing someone just on a billboard, basically. A lot of times you can actually call the IRS on your own and you can negotiate on your own. You can be your own advocate in these situations. So that's what I would recommend first before you go hire an attorney. See what you can do by just calling the IRS.
And then do you have like recommendations to your firm of, tax attorneys you guys have worked with or you guys could safely recommend?
Yep, I do. I do have a couple in my network for sure. They're not cheap. They're about $800 an hour, but they're legit. Yeah.
Okay. Well, I mean, you pay for the peace of mind now versus having to pay for it later. I always
Yeah,
look at lawyers that way.
exactly.
Um, So moving on, I want to go into kind of like LLCs and S-corp decisions for creators who are considering just forming an LLC or maybe electing S-corp status or C-corp status. These are the types of financial structures that get thrown around and thrown in the mix a lot. Which is the best for, the average creator? When would you make the move to the other? And what are the benefits to them?
Sure. So first, we should understand what these are. They're business. So an LLC is a business entity. It's its own business thing. It's separate. It draws a line between your personal assets and your business assets. You get an EIN number, which is like a social security number for your business. That's going to allow you to open up a separate business bank account with it. An S corporation is a tax status. So you need either a corporation or an LLC first. And then from there, you can have it taxed as an S corporation. So LLCs, to start, the first day that you're earning self-employment income, you do not need to go out and form an LLC. That's a common misconception. You can still take all of your business expenses with or without an LLC. You even still file the same tax return. You're still filing your 1040 individual income tax return. You're putting your income and your expenses on Schedule C. The difference is at the top of Schedule C is your LLC with the EIN number, and it allows you to open up the true business bank account. What an LLC does provide is liability coverage, right? It draws a line between your business and personal assets. So if you were to be sued, then only your business assets would be at risk and not your personal. So I suggest if you are in a contract with a manager or a photographer or an assistant or anyone, if you're in any sort of contracts, then I would have an LLC. If you're issuing a bunch of 1099s and you don't want people to have your social security number, then I would have the LLC. LLCs also offer some level of anonymity depending on what state you're in. But for example, you could have the LLC use a registered service agent address instead of your address. So that's what I do for my business because I have a newsletter. And at the bottom, you have to put in a business address. And I use a registered service agent address so no one knows my personal address. Also, depending on how you're earning income, an LLC could be helpful in discretion because the transfers could be between an LLC, like your LLC name, instead of you, the individual. So if you don't want your fans to know who you are, then the LLC could be helpful. As it relates to S corporations, there are tax savings and it does complicate your tax situation. So it's not for everyone. And this will require you to check in with a tax preparer. I don't recommend you just start an S-corp on your own. You have to file a separate tax return. It's due March 15th instead of April 15th. And you still have to file your individual income tax return as well. So right there is an additional expense. This is only beneficial to you if your profit, which is income less expenses, so you're tracking all of your income and expenses all the time. So if your profit is consistently around $60,000 a year, you might be a candidate for an S corporation. It also requires you to set up payroll. So you have to issue yourself a W-2 and you're paying yourself a reasonable salary. And then the tax savings kick in because you're saving 7.65% on self-employment tax. But if you set up an S Corp too soon, when you're maybe making 40,000, you have the LLC and you have it taxed as an S corporation, it could potentially cost you more money to maintain the business than the tax savings. So then it wouldn't make sense. And we see that a lot too. People come in, they have an S Corp and they really don't need one. And the fees are outweighing the benefit.
That makes sense. And I think that is there like a safe threshold at which you like financially wise? Because you're saying around 60K is like kind of when you should maybe consider the S Corp, because then the tax benefit might outweigh the cost of having that business structure. Is there like maybe a safer threshold to consider it at? Because for one creator, 60K one year could be 25K the next year. It can swing like crazy. So I'm wondering if there's like, if you're consistently over, 100K year over year, is that when you should be considering this, or is there just any kind of baseline that you'd recommend?
It depends on the trajectory of your business. I have some clients who call me and say, I made 5K 2 months ago, 10K this month, and now I made 40K. I went viral on TikTok. All right, if you think it's going to continue to grow, let's set up the S corporation. But if you just went viral on TikTok one time and you made a bunch of money for 2 months and now you're back to making 2,000 or 3,000 a month, then you're likely not a candidate. Yeah. So it does depend on a few things. It depends on like where you see your business going and if you want to continue to stay in business, because it costs money to dissolve, to undo everything that you're going to do as well. But yeah, if your profit's 100 grand, I think it's safe to say that you're a candidate. Yeah.
Okay.
But still check with an accountant. I still recommend everyone don't set it up on your own.
Yes, for sure. So I want to kind of get into this idea of budgeting. I spent all of my Sunday, just literally this past weekend, trying to get financially organized and, categorizing my expenses and trying to reassess where my budget will need to be personally for the new year. So I'm wondering if you think that creators should be considering their budget now, and then what things should they be considering in regard to the budget? So, taxes, growth, savings. What is the recommendation around budgeting for adult content creators?
Sure. So this is again more of like a financial planner conversation, but it's like, again, super important that you are dividing your income into categories. So you know where everything's going. How much are you saving for taxes? What are your personal savings goals? What are your recurring operational expenses that they're fixed and you can 100% count on are always going to be there? So again, I'm pointing to bookkeeping first, and then to your goals, and then setting those goals. And also, do you want to reinvest money back into your business? Do you want to buy a house? Do you want to focus on marketing and equipment or real estate? But I would say tracking your income and expenses and talking with a financial planner would put you on track for that. But now is a great time to think about it, heading into 2025, being proactive for sure.
Yeah. I know something that we've discussed a lot with creators and creators bring up to our attention often is just this, I guess, as aspiration to diversify income. Everyone who was in the adult industry, August a few years ago, was around when OnlyFans banned adult content and had to like find a new place to call home because we didn't know that we could stay there beyond that. So putting all our eggs in one basket is really scary as an adult performer. What should creators know about the tax implications of expanding into new income streams, like even like merchandising or coaching? Like I know a lot of creators sell coaching and courses online now too. When they're looking to diversify their income, is there anything tax implication wise that they should be aware of?
So you should have a separate bank account for your new income streams. So if you start coaching or selling merchandise, this is technically something different than creating adult content. So you should have a separate bank account and a separate set of income and expenses for that. That's the first thing. And then coming up with the systems to track that. As far as tax implications go, to start, it would still be your same 1040 individual income tax return that's due April 15th, but you would have two Schedule Cs. So you'd have one for coaching and you'd have one for adult content. And then something to consider if you're selling physical products would be sales tax. And that is sticky, and these states are very petty. So once you're selling anything physical, you have to start thinking about sales tax. That's something just to put in your radar. And then if any of these side hustles or new businesses require any contractors, you'd have to issue them a separate 1099 for their work.
Yeah, the individual state sales tax is what actually deterred me from continuing like the clothing line merchandise we had, or even selling merch. I had a small like phone cases thing where fans could purchase it, but just having to calculate individual sales tax per state sold in, it was really messy and complicated, and it just didn't seem worth it.
It gets very messy. Yeah. And there's accountants that specialize in just sales tax because there's so many nuances to it. So I would say, really ponder that. It can be worth it. It can be worth it, but I would really think hard and make sure that you're being compliant.
Yeah. I think those are the things that scare me and most adult creators is like accidentally being out of compliance, like accidentally doing your taxes wrong. Accidentally. It's like, it's not that anyone's intending to like pull one over. It's the misstep of not even having a remote understanding of these things. And then also the fact that they change so frequently.
They do. And you're never really taught about this in school. We're really not.
Yeah.
It's something that we're not taught about, but it's great what you do. And you're bringing this to the forefront and making this information accessible to everyone.
Well, that's because you're here to help. You're teaching me how to fix my situation. I definitely don't want to speak to things I don't do well. So that's why you're here.
Heard.
I wanted to mention two more things before we kind of wrap up the space. And the first one is audit preparation. Like my worst nightmare and things I've had nightmares about is getting audited. So I'm wondering, you mentioned a little bit about red flags, like many small transactions to our account from all these various platforms. But are there any big red flags that could trigger an IRS audit that maybe creators can prepare safeguard against?
Sure. So to start, if you get audited, it does not necessarily mean you have to pay more money. And it's not the end of the world. So if you get any correspondence from the IRS, the mail, I also hate opening the mail, but you have to open it, even if it's scary. So that's step one, is to open the notices that are coming to your door and make sure that the IRS has your current mailing address, or make sure that you are opted in to their digital notices in the IRS portal. As far as preparing for an audit, a big thing is round numbers. So when you're recording your expenses, the IRS wants to see $97, not $100. They want to see very specific, because think about when you go to swipe your card, when you buy something, it's not $20, it's $22.75. So having a bunch of round numbers is a red flag. Also, not reporting income. Big problem. If you made a bunch of money on Venmo and didn't include it on your taxes, there's still a digital trail of that. So you should be tracking and reporting all of your income, including cash. Writing off personal expenses is another one, and having very high expense categories. So we see travel and meals be very high sometimes. And I say clients, maybe we should revisit this. If you made 50 grand, it seems kind of sketchy that maybe you had $15,000 in meal expenses. Maybe just revisit it. Was this really a business meal? So make sure that you're not mixing business and personal things, and that none of your expense categories are very high, unless it makes sense for your industry, for your niche. Again, so if you are a creator who's specializing in cosplay, then it would make sense that your costumes and uniforms is actually a very high expense. And if you were to get audited, you could say, hey, here's the kind of content I do. I make all these custom clothes, and that would make complete sense. That tracks, but it has to make sense. And another thing would be missing documents. So if you had a random job, you had a random W-2 and you didn't include on your taxes, you could get audited for that. if you're missing tax documents. And then also if you had an S corporation and you weren't taking a reasonable salary too. That's another reason to get audited.
Okay. That's really useful. I think that with the fear of auditing, and it's funny because the first thing you said was open up your mail, and I'm sitting in front of such a giant pile of mail that I have not opened. Not all tax related given, but just scary envelopes that are so daunting. But you mentioned that you can sign up in the IRS portal to get electronic notifications. I can't tell you how useful that information was when I finally received it, because to your point, I had moved from Illinois to Tennessee, and any IRS mail was still going to my old address, and it was just never updated. I don't know where the disconnect was, but I actually had one of my other businesses accounts completely frozen because of $500 that was not paid to the state of Illinois, and the state of Illinois is brutal. And there was a lien on my business account, and it was frozen, and it was just such a nightmare. It took me I want to say like 30 days to get it reopened. Luckily, it wasn't like something doing crazy revenue, or I didn't rely on it by any means, but it was a really scary realization that can happen in over such a small amount and over something I didn't even know I was, needing to do. Like I just had no information. I just wasn't aware. So that part of updating your address and using the IRS portal cannot recommend enough.
Yes. And your state portals as well.
Yeah.
Yeah. And on the topic of missing documents. So if you're a couple years behind on taxes, which happens all the time, it's nothing to be ashamed of, people, and you cannot find your 1099s and your W-2s from 2022, when you log into this IRS portal, you can get a copy also of your wage transcripts, and you can just print it out. You can give it to your tax preparer, and we can use that information to file your taxes. And it's an exact replica of what the IRS has on their end. So it's a very
Oh,
powerful
nice.
portal. It's irs.gov/account. You can log in using your social security number to start, and then you'll have full access to everything.
Yeah, no, absolutely. The only other thing that I kind of wanted to touch on is retirement planning. We have conversations inside the SWCEO community, inside CEO Society, where we're talking about, exit strategy and what things should we be considering. And maybe this is a little bit, again, more to the financial planning side, but I'm wondering from, I guess, the tax perspective, are there special things, maybe tax incentivized retirement account options for self-employed people, for adult creators? And then is there like certain contributions we should be considering trying to make to those?
Yeah. So again, I'm going to say SEP IRA. And again, this is a financial planning conversation. I don't have the certifications. I can't speak to this too much, but SEP IRA, you can contribute 25% of your net earnings with a cap of $66,000. And you can actually make these contributions all the way up until the tax deadline. So you can make these contributions in early next year, and it can still benefit your taxes up until you're filing them. But absolutely, you want your money to be working for you as you're making it. And it's very rewarding too that we have a lot of clients who have been with us for a couple of years, and they're up to date on their bookkeeping, and they're putting money away for retirement, and they're set. Maybe not for life, but they're set. They really have money set aside by investing properly now while the money's coming in.
Yeah, no, absolutely. I wanted to actually spin off what you described, because I think so many creators listening in, myself included, this whole conversation, because you even brought up the shame of it, like it's not something to be ashamed of. And there's so much shame and stigma attached to what we already do. And then to not have a financial, understanding or literacy, and never having been taught it, and then having to manage your money, not as just a regular person with a regular job, but as an entrepreneur, it's very overwhelming. And I guess the question I would pose is that if a creator was to come to you, and I mean, given no one's two messes are necessarily the same, but is there like some sort of timeline where they can start to see improvements and feel a little bit of peace with this? Because I just remember when I first went to an accountant, like I was, I think, 2 years unfiled on taxes, and I had already had back taxes from year one in the industry. And the 2 years unfiled were just because my accountant didn't file them. It wasn't anything on my part. It was super like heartbreaking, because I was trying to do everything right, and it didn't pan out that way. But I'm curious as to like, if a creator's coming to you feeling like everything is a mess, is it possible that, a year from now they can have this sorted, or they can at least start to have a roadmap in place? Because sometimes getting started just feels like it's so daunting that like you just don't do it. You're almost paralyzed. And I've totally been there.
Yep. I totally understand as well. I mean, this is not, it's not digestible taxes, right? It's made so you don't understand it. And I've had hundreds of consultations with people, and usually the first 5 minutes is just everyone just venting about how stressed they are and they don't understand everything and they're embarrassed and they're behind. And like, I can tell you, most of the people that we're doing taxes for are behind on taxes, and we catch them up. Many entrepreneurs in any industry are behind on taxes. It's super common. It's just not talked about, and it's no reason to be ashamed. And if we do file your taxes and you can't pay off your tax bill, that's also completely normal for any entrepreneur in any industry. And you can set up payment plans with the IRS and your state. So what happens if you come to us and you're 3 years behind? And honestly, many people are behind, especially because of the pandemic. I feel like that hit and everyone's like, taxes are not even close to being a priority. But we just start going year by year. So say, okay, let's start with your 2020 taxes. Go into your IRS account. Let's see what you can pull out as far as wage documents go. Okay, you have a W-2 and two 1099s. Let's pull your bank statements for those years. If you can't access your bank portal, you can send away for the statements, and eventually they'll come in the mail. And then we can start organizing your income and expenses. I have a spreadsheet. A lot of people are operating their business out of the same bank account. This is something, again, that happens all the time. But it's literally just making something that's big, daunting, and scary and overwhelming and confusing, and just breaking it down into really, really tiny steps. But it's very doable. We've had several clients that we've caught up on, 2 to 7 years of taxes. And it really just depends on how quick you can get everything organized. Sometimes, it could take a couple months to get your income and expenses organized. But I think that if you went to a coffee shop on a Sunday and just ripped it off like a Band-Aid and just sat there and filled out the expense tracker, I think that that's manageable to do. And then as far as tax preparation goes, once we have all of your documents, it takes within the week, we can have your taxes done, and then they'll be filed with the IRS. And then you can either pay your taxes from there or set up a payment plan. And one thing I do want to mention is that the IRS is actually closing on November 30th until January 29th. So this is something that they do every year. So you won't be able to e-file your returns, but you can still paper mail them in. But it's also a good time now to get organized. And then as soon as the filing season opens at the end of January, we can file all your late returns.
Wonderful. When you say it and describe it, it sounds so hopeful. And when I open the mail, it sounds like the world is ending. I'm so grateful for you. You have no idea, because you make me want to open envelopes, and that's a really powerful thing.
Also hate opening. I can open your envelopes, but I can't open my own envelopes. That's why I'm very empathetic. I completely understand. Like, I
We'll do an
understand.
envelope exchange. Oh man. Okay, Katherine, where can everyone follow your stuff and get access to you, and also just continue to learn from you? Can you plug all your socials and your sites?
For sure. Follow me, guys. So I mostly hang out on Instagram and TikTok. I'm the _only_ consultant. I'm also on Twitter sometimes at the only consult. And you can check out our website, theonlyconsultant.com. You can set up a consultation with me. You can RSVP to become a client. We have a big list of FAQs. So check us out. We are accepting new clients for this next tax season. We take $100 deposit up front, and it goes directly towards your tax prep fee. So check us out, follow us. You can also email me anytime as well.
Thank you so much, Katherine. It's always so great to have you on. You shed so much light, and you give so much hope for something that's daunting. So thank you.
Of course. Thank you for having me.
It's a pleasure. All right, guys, we're going to start to wrap up this space. I feel like we've taken enough of your time and hopefully given you some hope along the way. And as many of you know, we've been activating our YouTube channel a lot lately. We have new courses going up. We have vlog videos going up weekly. And also, in addition to that, our podcast, which is this Twitter space, gets converted over on our YouTube channel. So if you're not following us there already, please consider doing so. It's youtube.com/SWCEO. For For those of you who missed it at the beginning of the space, we did launch our first actual product called GPTs.ai. That's GPTEASE.ai. And it is an NSFW safe, adult creator friendly chat GPT like product. And if you haven't used it, please go ahead and check it out. It's free to use. We have a 7-day free trial on the pro version of it, and it's there to help make any inspiration and any blocks completely a thing of the past. So it can help you, draft solo content ideas to film. It can help you caption PPVs you want to send out, maybe tweets that you want to publish that'll be highly converting, help you reply to a fan that you don't know what to say back to. All of the things that we do daily as a creator in any niche or content style and in your tone of voice. This is truly meant to be just an extension of you as a creator. And I think if you go over to GPTs.ai and you put in your personalization and your writing samples, you're going to see it do magical things. So I would love to get your feedback. I hope you try it, enjoy it. I hope it helps you as much as it's helping me and other members of the CEO Society, because it's really been a game changer. If you aren't already a member of the CEO Society, we mentioned this earlier in our space, it's our drama-free, creator-only community. It is a closed community for adult creators, and you can join us there at ceosociety.app. Anything you would want to know about, even GPT's prompts that are really useful, tips about the industry in general, advice from creators who've maybe done things you haven't tried before, whatever it is, it's happening inside the CEO Society. So again, you can join us there at ceosociety.app. Thank you guys all for joining in today. Thank you, Katherine, again, and I'll see you a week from now. Bye, guys.
It would be absolutely incredible if you rated this podcast 5 stars and left a little review. We want to get this podcast to as many adult creators as possible, and you taking a second to leave a couple stars and a review really helps us do that. Thanks so much.